Hi there. In today's episode, we're going to talk all about why your financial advisor or current retirement plan services provider may not inform you of being able to utilize your IRA, 401k, or other retirement savings account to invest in alternative assets, also known as investing in the private markets. That is investing in real estate partnerships, private equity, hedge funds, venture capital funds, private direct company investments, privately held shares of a company, gold and silver, or even cryptocurrency. As we always do on this show, we're going to answer one of our viewers' questions at the very end, so make sure you drop your questions and comments in the comments section. And of course, make sure that you hit the subscribe button and the little bell icon. That way we can send you real-time alerts when we release all of our new video content. Let's get started. Don't be surprised when your current financial advisor or retirement plan services provider doesn't offer you or provide information on investing in alternative assets, also known as investing in private market investments, with your IRA, Roth IRA, SEP IRA, solo 401k, or other retirement account. Now, why is that? Well, in many cases, there's no monetary incentive for that financial advisor or company to offer those types of options. In fact, in some instances, it could be considered out of compliance for them to offer alternative investments to you as an individual investor. Now, it doesn't mean that they're ill-advising you or they're steering you in the wrong direction. It just means that they don't have the competencies and they don't have the structure and the product offerings to be able to offer alternative private market investments. So you have to seek out other resources and opportunities. Remember, your financial advisor or your retirement plan services provider is one member of your financial team, just as Equity Trust, as a self-directed custodian, can be a member of your financial team. So if you want to take control or more control of your retirement account and you want to invest in the private markets and allocate a percentage of your retirement portfolio into private market opportunities, that's where you're going to want to seek out a self-directed IRA with an organization like Equity Trust that can accommodate these more unique alternative investments. Now, not all financial advisors are restricted in terms of only being able to counsel you and educate you on public market investments. There are advisors that do operate in both the public markets and then also the private markets. And we've been very privileged here at Equity Trust to work with thousands of licensed financial advisors that do offer capabilities around both public market investments and private market investments. Now, let me leave you with one resource that you could potentially gain access to with your self-directed IRA here at Equity Trust. Through our My Equity system, you can access a portal called WealthBridge. And WealthBridge can allow you to connect to private market investing platforms. Now, we're not providing advice on different private market investment opportunities. We're not serving as your financial advisor, but we provide the gateway so that you can examine a variety of private market investment opportunities, and then in a seamless, efficient, and digital environment, you have the ability to select private market investments and easily initiate those investments all from your Equity Trust self-directed IRA. Now, what I'll do is I'll drop in the comments box a link that will take you to our WealthBridge page, and you can learn all about the private market investment strategies that are utilized from the private market investment platform connectors. So you can check out that link to learn more. There's video content and all types of information that you can gain access to there. All right, the second reason why I find financial advisors and various financial services organizations in the retirement plan space are not informing investors of alternative investments is because of the education or information gap. Again, it's not that they're ill-advising or steering people in the wrong direction with intent to do that. It's that there's not a lot of information and education out there around how does a self-directed IRA work? What are the rules? What are the guidelines? How do you process a transaction? And that's where Equity Trust can help inform you and inform other members of your financial team. In fact, we have a YouTube video that's dedicated to this. And you'll find that YouTube video where it references share this with your financial advisor or your CPA. Maybe you share it with your estate planner or other financial professional that you're working with, or maybe even other family members. And the design of this video is to inform you and those other members of your financial team on how does a self-directed IRA work? How can you utilize a self-directed IRA to invest in private market investments? And how does that work with Equity Trust as a private market alternative asset IRA custodian? So you can check that out as well. Check out the link to WealthBridge in the comments box. Let's move on to our question for the day. This is from Richard, and he wrote this question in the comments box on our most recent Getting Real video. And Richard says, I'm retired, age 75 with no earned income. Can I convert an existing traditional 401k to a Roth IRA? Richard, great question. Thank you so much for asking this question. Keep the questions coming. Now, if you don't have any earned income, and for the benefit of everybody on today's program, what Richard's speaking of is when you don't have earned income, you can't contribute to an IRA, traditional or Roth or even 401k. You have to have earned income in order to make a contribution. What is earned income? That would be income, think that you're paying taxes on, your ordinary income taxes, and then you're also paying payroll tax. So think Medicare and Social Security. That's earned income. If all you have is passive income from rents, royalties, interest, dividends, pension payouts, that is not earned income. So you couldn't use that money to support a contribution to an IRA. Now, Richard's question is not about can I contribute, but can I convert money from a traditional IRA, or in this case he says traditional 401k, to a Roth IRA? And the answer is, Richard, absolutely. Now, the first step of the process, if it's in a 401k still, you would roll that over into a like account, which is a traditional IRA. Most likely your 401k is all tax deferred from what you're saying. If you did have Roth money in that 401k, because some people do, you would just roll that over to a Roth IRA. But let's say all you have is tax deferred money in that 401k. The first step of the process is roll it over to a traditional IRA, and then from there you can convert it to a Roth IRA. Now remember, when you convert the money, whatever amount you convert is added to your ordinary income, and then you have to pay taxes accordingly. As we talked about in the last video, you can convert all of your money, or you can convert in stages. So you can convert chunks of money over many years in order to spread out your tax burden. What I'd encourage you to do, Richard, is sit down and really crunch the numbers on what's going to make the most sense for you. And also think about, if you intend on leaving it to your children or grandchildren, if it's still in a tax-deferred account, they'll ultimately pay taxes. But if you convert it now, then the children or grandchildren, they won't be paying taxes when they withdraw the money because it'll be in a Roth environment. So there's a number of factors to consider, to sit down and think about. Also, what is your return on investment going to be going forward? So does it make sense to pay taxes on the seed or on the crop? And of course, I'd encourage you, Richard, if you have a CPA or a tax professional, to sit down with them, crunch the numbers with them, and determine what's going to be most prudent for you. So a couple different ways in which you can convert there. Again, you can convert all the money, or you can convert in stages over the years. Keep the questions coming, Richard. For everybody else, make sure you drop your questions in the questions comments box. Make sure you drop your comments in there as well. If you're doing interesting things with your self-directed IRA, or you have interesting ideas, please share those with us. Until the next Getting Real video, keep leveraging compounding interest in the absence of taxation.